let's go ahead and delve into how the return of student loan payments might influence housing for various stakeholders, beginning with the impact it'll have on existing homeowners. Now, given their specific debt figures, mortgage commitments, and individual financial situations, some homeowners may face payment challenges, and the ability to repay is going to be harder and harder for folks. Balancing both a mortgage as well as those student loan obligations could push a few towards default, potentially leading to foreclosures, impacting their credit. And that also then hampers their borrowing capabilities in the future too. These homeowners should reevaluate their finances right away, considering aspects like income, expenses, credit ratings, and debt to income ratios. And that said, the forthcoming shift in student loan payments through the Saving on a Valuable Education, or SAVE program, that might ease the debt to income ratio for some, enhancing home affordability again. But for those who qualify for the SAVE program, it's going to be crucial that they familiarize themselves with the new repayment setup and its implications on monthly expenses and debt to income ratios. Beyond the effects levied on current homeowners, what sort of effects should we expect to see on home prices following the restart of student loans? Well, experts are really starting to say that student loans will only slightly touch home prices. Kurt Carlton, he's the co-founder and president of New Western, which is a private marketplace for residential investment properties. He remarked that even with concerns around student loan repayments resuming, the housing market might remain steady due to strong demand from other demographic segments. While the fraction of the 43 million student loan borrowers might face economic hurdles, a vast majority of over 200 million adults remain unaffected by this debt. However, he did express concerns about younger individuals that are facing obstacles in leveraging homeownership for wealth accumulation down the road, especially if their educational debts don't correspond with higher incomes, which, as we all know, happens frequently. He went on to note that such borrowers might find themselves being outbid in specific markets, or might have to consider more budget-friendly housing alternatives like simply renting. Though the effect on the home prices may be small, Carlton expects to see some noticeable shifts in home buyer demographics. A typical starter home necessitates a $65,000 salary, and a mere $500 fluctuation in loan repayments can be the difference between qualifying or not. So it's safe to say that these elevated expenses is going to deter younger buyers from the market, and the home ownership trend may skew towards favoring a much older age. So it's going to be very interesting to see how the combination of our high interest rates, high housing prices, risk of inflation, and the resumption of student loan payments is going to affect the economy as a whole in the coming months. It sure seems like a convergence of factors that may lead to a so-called perfect storm for an economic downturn. But it seems like most outlets are relatively optimistic. So we're going to have to see. Obviously, it's a waiting game, and anybody that says what's going to happen is speculating. From where I'm sitting, it does look as though the lower and middle classes are situated to take the brunt of the negative effects these factors are going to produce as usual. But what do you think? I am curious to hear whether you think these factors are frightening or just another thing that we're going to have to wait and see about. Be sure to leave a comment below with your thoughts. Also, if you found this information valuable, of course, please give it a thumbs up. That helps us with the YouTube algorithm greatly. We've been impacted a lot over this year with our view counts. We have a tremendous audience still that has been really interactive and taking advantage of many of the concepts and ideas that we teach here, and how you can hack the banking system to continue to grow that cash flow. So with that, I say, until we see you on the next one, make it a great day and keep on cash flowing. See you soon, friend. Bye-bye.